Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths in today's biggest companies. And in this report, it looks like our energy giants are powering up those profits, but are they really telling us the whole story? We are diving deep into the latest annual report from DTE Energy Co and its subsidiary DTE Electric Co to see what is really cooking behind the scenes. Alright, first up, let's talk about the big picture, the financial health of DTE Energy and its subsidiary DTE Electric. In 2025, DTE Energy is reporting revenues of $15.8 billion. Wow, that is a massive number, and their total assets clocking in at around $54.1 billion. Now, their net income attributed to DTE Energy Company was $1.46 billion. That is quite a jump from 2024. For DTE Electric focusing on its own numbers, we see its own set of results. Their operating revenues from utility operations alone were $6.885 billion. That is a substantial chunk. And across the whole electric segment, operating expenses were $5.274 billion, meaning they brought in quite a bit more than they spent on the operational side. Let's look at where that electric segment revenue is coming from. Residential customers brought in $3.144 billion in 2025. That is a solid base of customers. Commercial customers contributed $2.195 billion. Industrial customers added $652 million. The electric segment's total operating revenues reached $6.935 billion in 2025, a healthy increase from the previous year. Now, for the expenses on the electric side, fuel and purchase power is a big one. It went up to $1.804 billion in 2025. That is a significant expense. This increase was mainly driven by higher gas prices at $118 million and impact from higher transmission expenses as well. Despite those rising costs, the electric segment's operating income was $1.661 billion in 2025. That shows they managed things quite well to keep that much profit after expenses. Moving over to the gas segment, mainly DTE Gas. Their utility operations brought in $2.052 billion in revenue in 2025. The cost of gas alone was $596 million, a big expense for this segment. However, their operating income here was $497 million, a pretty good showing. Looking at gas volumes, gas sales were 145 billion cubic feet in 2025. So a lot of gas being moved and sold to keep homes and businesses warm. Now let's check out the DTE Vantage segment. This is where they are pushing renewable energy and custom solutions. Their operating revenues here were $696 million in 2025. Interestingly, this segment's operating income took a dip from previous years, but they are focusing on growth areas like carbon capture and sequestration, which is forward thinking. Next, the energy trading segment. This is where things get a bit more volatile. Their operating revenues were huge at $6.477 billion in 2025, but the expenses, especially for purchase power and gas, also ballooned to $6.174 billion. This segment can swing wildly, impacting overall earnings. Tying it all together for DTE Energy, overall net income attributable to DTE Energy Company hit $1.462 billion in 2025. This was mainly thanks to strong performance in the electric, gas, and DTA Vantage segments. Now let's talk about where the money is going. DTA Electric is planning massive capital investments of $30 billion over the next 5 years. This is mostly for improving their distribution infrastructure and for cleaner energy sources like renewables. It shows a huge commitment to upgrading their grid and moving towards cleaner power. They are retiring old coal plants and investing heavily in solar, wind, and battery storage, all part of a big clean energy transition. This is a massive strategic shift, but it is not all smooth sailing. This filing highlights significant risks. Regulatory and legislative changes are a major concern. They could impact how much money they can charge customers and recover costs. Environmental laws too are a big deal, costing them a lot for compliance and remediation. Imagine having to spend billions on pollution control. And of course, there are operational risks like equipment failure or even cyber attacks, which are a growing threat to energy infrastructure. Plus, the volatility of commodity markets for coal and natural gas can really shake things up. Looking at DTA Energy's own management discussion, they are very clear about their strategy. It is all about long-term earnings growth with a strong balance sheet and attractive dividends. But they are also heavily investing in a cleaner grid and cleaner energy sources. They even have a net zero carbon emissions goal by 2050. That is ambitious. Financially, things look pretty solid. DTE Energy ended 2025 with $250 million in cash equivalents, and restricted cash. Their operating activities generated $3.4 billion, which is awesome, but they used a lot of cash for investing activities at $5.3 billion, mostly in plant and equipment. That is where all those capital investments are going. They believe they have enough cash and funding sources to cover their needs. They expect operating cash flows to grow driven by their utility and non-utility businesses, and they plan to issue significant equity over the next few years to keep funding their growth. The corporate and other segment had a loss of $268 million in 2025. This segment mainly covers holding company activities and investments. The loss was mainly due to higher interest expenses and taxes. When we talk about fair value numbers, DTE Energy has a detailed breakdown. For natural gas commodity contracts, the forwards basis price range from -$1.35 to $9.33 per millimeter BTU. For electricity, it was from -$21.82 to $17.79 per megawatt H. Understanding these numbers helps gauge their market exposure. Looking at the total assets across all their reportable segments for DTE Energy, it was a massive $54.1 billion by the end of 2025. The electric segment alone holds a huge chunk of that at almost $39.4 billion. And for DTE Electric specifically, their total assets were $38.99 billion. Their long-term debt, excluding the current portion, was $12.419 billion. So what is the verdict? Honestly, DTE Energy is navigating a complex landscape. They are making massive investments in cleaner energy and grid modernization, which is strategic for the future and good for keeping customers happy. The financial results show they are making money, but those rising operating costs and huge capital expenditures are definitely things to watch. Their biggest risks revolve around regulatory changes, environmental regulations, and market volatility for energy commodities. It is a delicate balancing act between investing for the future and delivering consistent profits today. They seem to be managing it reasonably well for now. Alright, that is our deep dive into DTE Energy's latest filing. What do you think about their shift to cleaner energy and their hefty investments? Let me know your thoughts in the comments below. If you found this breakdown valuable, give this video a thumbs up and subscribe for more corporate secrets revealed. And don't forget to join our community on Discord linked in the description. Thanks for watching, and we will see you next time.